What's up, everybody? Welcome to another edition of Dave's Daily Dives. Here with you, like I am every day, Dave Bartosiak with Zacks.com. Why don't I go ahead and dig into it here? We're going to look at some major macro indexes, then a couple of very relevant charts to today's action, and then I'm not going to leave you hanging. I'm going to give you 5 Zacks Rank #1 strong buy stocks that are breaking out to the upside. So to get started here, first, I'm just going to talk about the VIX, the volatility index. Now, the VIX has been going through a period of historically very low values. And yesterday, the day before, we're talking levels that it hasn't seen since 2007. I'll let you guess about what else was happening in 2007. That's right, we had all-time highs in the stock market. So I'm not saying that to make you nervous because of what happened in late 07, 08, 09, just to give you some historical perspective. So the VIX remains very low. Last time we had a spike was the second week of April, heading into, this was Good Friday, I believe, heading into Good Friday. And then after that, following up Easter Monday is when things started to settle back down there in the VIX. So what does that mean for the equity markets here? Why don't we take a look at the S&P 500? You can pull that up, just SP 500. And you'll see that still playing off of this big fib from the November to early March move here. And the S&P broke through the top end of this downward trend channel that it had, finding support a couple times here at this 23.6% fib. And now we're kind of butting up right near the all-time high. This is still a very good thing overall for the markets. Still very bullish indeed for the S&P 500. So as long as we're ticking up here, as long as earnings keep on coming in decent, I expect there's going to continue to be upside pressure here on the S&P 500. Now, the higher beta names in this market, first, the Russell 2000 small caps. So typically, you're going to see these move more than what you're going to see in the S&P 500. Down day here today on the Russell, and really we've been going chopping sideways 5, 6, 7 days in a row after breaking through the top side of this downward channel, getting up to new highs, new all-time highs, that is, and then we've since retraced, and now we're sitting here sort of right near, 1395-ish was the mid-December high. So it's interesting to see this kind of just parking itself, and it's really just waiting, because when you think about the Russell, it's more domestically inclined, so it's going to react to any policies we see out from Capitol Hill regarding tax reform or anything like that. That's why you saw this huge rally following the election day before anything really happened. So expect more choppiness as long as there's choppiness on Capitol Hill. Now, one major market index that has been just surging ahead for the most part is the Nasdaq. And this has been supported by a lot of very bullish earnings that you're getting here on the market. And overall, I mean, just look at this really nice trend line from the November lows. And I think if you go out even further here, you'll see that this trend line technically started long before that, and it's been very bullish along the whole ride. The 50-day moving average has been tested on a handful of occasions, but every time it finds support and it does rally. So here we're a little bit overbought on the commodity channel index, but really it's not that terrible, and it's just ticking right near all-time highs. A lot of momentum still here in the Nasdaq. What doesn't have a lot of momentum, I'm going to touch on real briefly here, is shares of Macy's. They took a tumble after they missed their earnings, and things just getting a little bit worse. And that resonated throughout the rest of the sector in retail in general, including Nordstrom, which had earnings after the bell today. So we're going to see how that gets affected. But this was down 7% today, just as a result of the bad earnings coming out of Macy's. So that's the bad news. What about the good news? Let's look at a couple of these Zacks Rank #1 strong buy stocks. And when I'm looking at these stocks, I like to have my commodity channel index, but there's another indicator that I like to have here, and that's the shaken money flow. So go ahead and load that up here. And essentially the way that I use that is levels above 0 represent buying power, and you want to look for divergences. So this getting weaker while the market's going up, that could be a sign of some bad things to come. And then the opposite, if this is increasing while the stock is just going sideways, that could be a buy. But here on WellCare, so they do managed care services for government-sponsored healthcare programs, ticker WCG. And again, this is a Zacks Rank #1 strong buy. And these guys have been breaking out since 150s and just have not ran out of steam since then. So very strong move here from the lows, has burst on through. This is something that, I don't know, maybe you want it to cool off a little bit. You got the commodity channel index here overbought at 100. You might want to wait for that to come down to the 0 line before loading the boat on shares of WellCare, ticker WCG. Then we have US Concrete, ticker USCR. I'll give you 2 guesses as to what they do. You're right, concrete. So ready-mix concrete for the most part in concrete services. So they've been chopping around in a range basically from 58 or 60 for the most part up until these highs right in the 68, 69s. Nice little gap up here recently, and now again it's just butting up against resistance at that 52-week high. If you can get a little bit more momentum and push it on through the other side, it should be good. I think I'd be waiting for a retrace down here to 60 to buy it, or buy the breakout up above 72.5, and you can go ahead and ride its coattails for a little bit. That's Zacks Rank #1 strong buy, US Concrete, ticker USCR. Then I have Syngenta, ticker SYT. This is an agribusiness company engaged in crop protection, seeds, lawn and garden market, pretty much worldwide. They've been on a very nice run since finding lows here in November. Moved right along that 50-day moving average for several days in a row. Probably this almost looks like 3 weeks of trading in a row, then finally found a bid, and you do see this deep retracement intraday to the 50-day moving average before finding another bid. Now again, this is a Zacks Rank #1 strong buy, so this recent move on a technical level has been supported by EPS estimates being pushed to the upside, so that is a very good thing to see out of Syngenta, ticker SYT. Then we've got Stanley Black & Decker, so they do tools and security equipment. And these guys have, again, been on a nice little run here recently, bottoming out at the end of last year, 114. Since then have been on a nice little run. The 50-day has provided support all along the way. The money flows have been positive for the most part since crossing over the 0 line in the end of, well, late to mid January here, the 23rd-ish. So since then, it's been all good over here at Black & Decker. You do have this intraday spike up. Market retraced a little bit, then found strength, gapped up, and then now has since been kind of knocking around this sort of 140 level. There's a lot of volume that's gone out, sort of 140, 139, so a little bit of resistance there. But this seems to be a very persistent stock that over time finds a way to just push its way higher. So as long as it has that support from the EPS estimates going higher, should be a good one. Stanley Black & Decker, ticker SWK. And the last stock I'm going to show you here is FreightCar America. So they do rail cars for transportation and commodities and freight products. Huge spike up recently. This is a stock that has just begun to really skyrocket recently. Broken on through to new 52-week highs. His previous high sort of was 1634-ish. So you got a fierce move upward. Now I would be a little bit cautious about the way that this candle looked today, because you basically fully encapsulated yesterday's price action going on either side, but still did manage to close a little bit higher. So as far as the bulls are concerned, it's still a feather in their cap, but this is certainly something that could be stalling out a little bit here. I think I'd be more comfortable looking for a nice little retracement on this. So I would go ahead and take the move from the recent lows to the peak of this, jump higher, and you see the 23% retracements puts us around 1665. The 38.2s at 1695, and again you have this previous resistance level at 1635. So I think if you look at target 1650 as an entry on this one, you're going to be okay. What stops lower below this 32.8% retracement even further out. So a little bit of patience might pay out here for FreightCar America. Okay, if you're not already hooked up on Twitter, hit me up at Bartosiastics, Bartosiastics, so you can get all of Dave's daily dives coming to you, well, daily. So thanks so much here from Zacks.com. Have a good one.